Okay, good morning everyone. It's the live trader stream for Thursday, February 15th, and the markets are opening in 30 seconds. The written edition of the blog, Traders Espresso, is published. The video edition is recorded. It's processing. It's not yet accessible. It will be once it's done processing with YouTube. Once YouTube's done working their magic on it. So I'm expecting an interesting day today. Futures are up, and the bell has just rung. And let's take a look at what's going on. I took the opportunity to pair some positions yesterday. I got out of Apple. I maybe should have stayed in it. I still have my Facebook that I rolled it from a bearish put spread to a bullish put spread on an analyst call yesterday, stating that his price target was, he's doubling down on Facebook, stating a price target of 240. I took a look at that. I think that 200 is probably reasonable, maybe a little bit higher than 200. 195 to the 200 area is reasonable by about May. So that's kind of the bet I'm taking. Emerging markets are higher, and I need to take a look and see if the VWO is going to continue higher, because if it is, I need to get rid of this. I need to buy back this short call. I mean, I have until March before it expires, but I don't want to be giving up too much upside. And my XLRE is just a lost cause, so that's going to expire worthless. Apple's up another 1.3%. If we take a look at sectors, I mean, we're going to be up across the board. Energy's down. Real estate's down. Everything else is up. The big leader right now is information technology. Actually, no, healthcare, then technology, then financials. Industrials actually are up there in the top 5. So let me just sort. That'll make it easier. Industrials, information technology, healthcare, financials are in the top 4. Lagging are energy and real estate. Facebook is only up. Well, now it's declining, because I don't know why Facebook is getting hit. I am going to look at trading some futures more aggressively today. Yesterday I was trading futures more as a hedge, which was good because it was profitable. I wound up having a very good day yesterday, especially when I took off my negative delta, because it became very clear that even with the inflation number coming in higher than people had feared, or as people had feared, that this market was just not going to be held back. So I took off my negative delta and I went bullish. And I don't know for how much longer that is going to be the thesis, but for as long as this market continues to stay irrational, and I believe it's irrational, I'm going to ride the trend. So I'm just trying to adjust this camera so I don't look like a ghoul, but I also don't look washed out. And futures are now fading. Sorry, there's going to be a little silence here while I open my other windows. Just be real quick talking about. You know, yesterday I would have expected, in the face of inflation, numbers coming hotter than expected. I would have expected the dollar to rise, which it did initially, but then it plummeted. I would have expected bond yields to rise and the markets to fall. And everything followed that script until about 8 o'clock, and then it all started, 10 o'clock Eastern, and then all started to break down. And what you're seeing here is the colored candles are the dollar index, and these purple bars are the 10-year Treasury yield. And you can see where they're moving in sympathy with each other, but then here right around 8 o'clock they diverge and they take completely different directions. The dollar starts to fall for some inexplicable reason while bond yields continue to rise. Usually they move in correlation with each other. I'm not saying it's perfect correlation, but you don't expect a negative correlation. Well, that's what they did. And it was right around that time also that the indices turned around and started to climb higher. Now, this isn't like just now happening. I mean, if you look at a daily chart over the course of last year, you know, this started to happen in early January, where they kind of moved, these two measures moved in sympathy with each other. Again, not a perfect correlation, but correlated. And then they kind of converged here a little bit more than you'd expect. But then here they just diverged dramatically. Dollar weakened, bond yields rose. So is this a function of policies out of Washington? Was this around the time that this have anything to do with the controversy in Davos when, you know, Mnuchin said that the U.S. would be okay with a weaker dollar, and President Trump came out and said, no, we want the dollar to be stronger? I mean, it might have been. And actually, if I look at that, I mean, this occurred back in mid-December. This is when it kind of started. Is this a function of, you know, are Trump's policies, President Trump's policies, weak for the dollar? Basically, when is the dollar weak? When there's less demand for it? Well, there's less demand for treasuries, which is why yields are going down. But then it's a balancing act. As yields rise, treasuries become more attractive. In order to buy treasuries, you need their dollar denominated, so you need dollars. So this is going to create some upward pressure on the dollar. I mean, economics is nothing but one big balancing act. So when things are out of equilibrium, or when the relationships break down and they stay broken down for longer than you expect, it's worth looking at. It's worth asking some questions. And it looks like the video edition of Traders Espresso is now accessible. Autodesk is doing quite nicely. Facebook's getting hammered today. No, hammered, it's down $1, but BWO is up 85 cents. Alright, enough of that. Let's get serious about some things. Let's get trading. Well, the assessment looks like full steam ahead. I mean, this is a bullish stochastic crossover on the daily chart forming, which means that the NASDAQ futures want to make up all this lost ground. So looking at the Fibonacci, this was the high on a 30-minute chart over span of 20 days. That was the high. This is the low. The 38.2 and the 61.8 are major retracement areas. They usually act as resistance. So on the way down, you know, it kind of just blew right through this level here, and it found some support at 61.8, and then really traded almost all the way down. I mean, without stopping. Kind of bounced back up here, found a little support at the 38.2, found some resistance at the 61.8, bounced back down again, found support, found resistance at the 50, blew through, found resistance, traded down here, comes up, doesn't really find a lot of resistance at the 38.2, doesn't really find resistance at the 61.8, but it's support. So it's now support. So the next stop, if you're a subscriber to the whole Fibonacci thing, is potentially this 68.14 level, although that's usually minor resistance or support. And see right now, in keeping with my discipline, I want to make a play to the long side, but I don't want to do it until we've sold off a little bit here in this chart. Quite frankly, on the 1 minute too. I mean, everything here is looking a little frothy. You see my fast stochastic here never made it down, or sorry, slow stochastic. The fast one did. And I'm not ready to short until I see a crossover here. I want fast to cross over slow. Now the good news is there's a crossover forming here. What I meant by that was I had a buy order to, and I left it live, and I added maintain some profit. Well, it got me out. It's worth looking at Autodesk and seeing where we stand on it. Yeah, I mean, looking at the stochastics, everything's just fruit punch and rainbows and birthday cake. Now, if we adjust this Fibonacci, because it was drawn with that as the low, but that's not the low anymore. This here is the high, 131.10. The low is actually here. At 101.55. Which would tell you it's still got a ways to go before it hits this resistance point, the 38.2, which was 114.32, but if we fix it, actually we're looking at more like 112.84. So we're getting close to that. Now, looking at our momentum indicator, which is our stochastics, this is a concern, this is a concern, even though this histogram is shrinking, it's indicating bullish. We still have some downward momentum on the slow stochastic. I don't like it when the fast and the slow are so close together. I mean, yeah, it looks like a crossover. So I think for me the best way to hedge is to probably sell a call. Probably sell a 113 or a 112.50 if it's available. Probably a 113 against it and just kind of see what it does. If it continues to blow through, then either close the position completely or buy back the call and just let it ride. Right now Autodesk is hitting its highs for the day. So it's getting really close to that 113. Now here's the question. Which expiration do I pick? Do I pick tomorrow or this week? Or I'm sorry, next week. next week. I'm getting a lot more premium for next week. Almost double. Actually more than double. Wow. I put it in at $1.84, I got $1.89 for it. So at least for right now, Autodesk is not showing any signs of stopping. Now what's going to help me is if volatility continues to decline, because there's volatility built into that pricing. When you sell a call, when you sell premium, you're hoping, selling premium whether you realize it or not, you're hoping for decreasing volatility, because volatility going up causes premium price expansion. You want to sell at a high, you want volatility to come in, so your pricing premium will deteriorate. So it's just about 8:30. I'm going to take a quick break, top off my coffee, and I'll be right back. As I was walking back to my desk, a thought hit me. I'm going to share it with you. Don't trade on what the market should do. Trade on what it's doing. And I fought with that for the longest time because I've been, looking at what's happening. I've been seeing really frothy, toppy market action and saying, what this tells me is that there's a correction imminent. Now, imminent, sometimes it can mean tomorrow, sometimes it can mean a couple months. You just never know what it means. But until the market actually does that, you can't trade what the market should do because it's going to prove you wrong. And it will be painful, and you will lose money. That's what makes it painful. Now, when you're selling calls against a long position, whether it's against shares that you own or if it's a long call, think of it as an alternative to actually just covering your position. Like, I was looking at the Fibonacci and I'm saying, okay, 112.84 is resistance. I don't want to give up my profits, so I could buy the call, I could sell the call and just walk away with my profits, or I could kind of wait and see what it does. Or maybe I can make it, if I would otherwise sell it, maybe I can make a little extra premium. Now, if you're wrong and Autodesk keeps going up, right? In my case, if I'm wrong and Autodesk keeps going up, then I gave up all that upside. But I was contemplating selling it, so that's not upside I would have gotten. You cannot kick yourself for that. Like, I'm going to sell Autodesk right now, but you know what? I'm going to, if it continues to go up, if I sell the premium, if I sell that call at expiration, I get to keep that premium, right? And if you're wrong and it goes against you, then you can buy the call back for for less, especially if it's going to rebound. But don't make that mistake of selling a call and then kicking yourself because the stock price continues to go up. Like, oh man, I should have, look at all that money I'm giving up. No, you're not giving it up because you were going to sell the call. You were going to get out of that position. Yeah, in a perfect world where we had crystal balls, we could predict everything, but we don't. Selling a call is just one way to hedge. So checking in on where we're at. The Dow's up 143, the NASDAQ 100 is up 62, the Composite's up 52.5, the S&P's up 11 and change, and the Russell's up 3.3.5, just about. The Russell's the laggard, it's only up 23 basis points. The NASDAQ 100 is the leader, it's up almost a full percentage point. The yield on the 10-year note has come in, it's 2.891, it was 2.915. The VIX is down, but it's off of its lows. The VIX futures, I want to say, are also off of their lows. I'm trying to remember where it was before. And we're seeing a lot more parity in pricing between the futures and the cash markets. Last week when we had just tremendous volatility, there was a big difference, much bigger difference between the cash markets and the futures. The futures were projecting a recovery, which we've gotten, because if the cash markets were down, if the Dow was down 1,000 points, the Dow futures were only down 750. So it was almost a predictor. The dollar index is down 40 basis points. Gold's down, which is probably has a lot to do with bullish markets, because it's not really, gold should be going up with dollar weakness, but if there's no flight to safety trade, then gold's that fundamental aspect of it's going to play as well. Crude is down, but it's still above 60 bucks. The yen is stronger. Yesterday's close was about here. So the yen is stronger. So if you're not familiar with Forex or currency pairs, this is the US dollar and the Japanese yen. Now the US dollar is the one that's on top, okay? So basically, it's like if you were a buyer of dollars and a seller of Japanese yen. That's what this is saying, okay? So because this number is down, that is dollar weakness against the yen, or conversely, yen strength against the dollar. That can be tricky sometimes. If you look at the euro-US dollar, the pair for the euro-US dollar is euro-USD, not USD-euro. So in that case, with the number up, that means the euro, because it's the numerator, right? If this was a division problem, the euro is the numerator, the US dollar is the denominator. So the euro is strengthening relative to the US dollar compared to yesterday's close. I don't trade Forex. If I want to trade currencies, I'll do the currency futures. Those are all dollar denominated. I don't know if I necessarily want to get into the whole thing of like analyzing, what the Japanese economy is going to do relative to what the European economy is going to do if I want to trade the euro Japanese yen. So in this case, what this tells us is that the yen is strong against the euro, because this currency pair is down 33 bits. And really, I'll bet you if you look at it today, the yen's probably up against any of its counter currencies, with the exception of the Australian dollar, because Australian dollar, I don't know, it's even stronger against the dollar, Australian dollar. Now, I have heard it said, and I have to give this credit to Shadow Trader, the Forex trader over there, Australian dollar, Japanese yen is a proxy for risk in the market. So if Australian dollar is strong, equities globally are strong. If the Japanese yen is strong, then equities globally are weak. So this pairing, this would basically be a referendum on the strength of equities globally, saying, yeah, U.S. equities are up, but this pair is telling us something different. Couldn't tell you why that is. I don't know how reliable that statement is. I never looked into it. The yen is strong against the Canadian dollar. It's flat against the Swiss franc, which is another flight to safety trade or play. We already saw it was strong against the euro. It's strong, but not quite so much against the pound. The pound itself got a little bit of a lift because kind of a rumor floating around that the negotiators for the EU are going to soften their stance when it comes to Brexit negotiations. So what's at play here is British pound strength, pound sterling strength, not necessarily any relative weakness in the yen. The dollar, Hong Kong dollar is weak against the yen. The Norwegian krona is flat. I don't even think a trade's taking place there. The New Zealand dollar is weak against the yen, so the yen is strong. The Singapore dollar is flat. Turkish lira, in case you were wondering, is also flat, so no trades happen there. Those are some of the more exotic, kind of obscure trades. And in case you're wondering what the South African rand is doing, now, hard to tell because there's no trades that have occurred there. The South African rand has been strengthening, though, because Jacob Zuma finally announced that he's doing the right thing and stepping down. So the African National Congress is going to... last I read, they were debating electing Cyril Ramaphosa as their new leader, which means that he would be the president. Elections coming up, I don't know how soon, a few months, I guess. The Dow is now dipped below 100, so we're losing strength here, and the VIX has actually turned positive. It's up 20 basis points. VIX futures are still down about 1%. And, like I thought, Autodesk looked above this 112.84 and it's coming back now. Keep an eye on my VWO because I've been contemplating buying that call back to cover if it's going to continue to go up. Let's clean this up a little bit. Now, depending on how you want to draw this, if you place this upper bound here, then emerging markets traded out of it, out of this price channel, and have come back into it. But if you draw it here, then it didn't. It stayed within, and it would have room to go up. Now, what's the right answer? I don't know if there's a way to tell, honestly. Just wait. I mean, I think this because of just how you're seeing support here and resistance here. You wouldn't see that moving it up here. It doesn't fit as neatly. I mean, okay, yeah, there's resistance here, but there's no support here whatsoever. So kind of what this picture is telling us is if the 23.6 is not going to act as support, which it's kind of a soft line of support, it doesn't always do that, then that would tell you, okay, then VW is going to move down towards the 38.2, but it's not going to have the chance to reach there if this price channel holds. That would be your line of resistance, or in this case, actually support. Now, if it breaks through there, then yeah, you would look for support to occur at 42.20. Mortgage rates hit the highest since 2014 comes as no surprise with the 10-year note knocking on the door, the three handle. Home builder sentiment is high. Now, how high will home builder sentiment be if it trades to 3? If the 10-year note trades to 3.5, which is what Goldman Sachs is calling for, and not that they're always right, you know. The Pac-Man cryptocurrency. Let's see what that's all about. Huh. Now here's the thing, Pac-Man was not an Atari game. In fact, I'm struggling to come up with a name. It wasn't Nintendo, that was Donkey Kong. Namco. Pac-Man was a Namco. So it won't be Pac-Man token, it'll be Atari token. Yeah, Kodak did this a while ago. They came out and said they were coming up with some cryptocurrency, which basically was just a digital rights management play for photographers. So this headline was kind of deceptive because it has nothing to do with Pac-Man. You know, Atari was not a Pac-Man video game maker. Like the Atari 2600, there was a cart that you could buy the Pac-Man game. Pac-Man was a Namco game. Now, if Atari, whatever Atari is now, like this Atari SA, which is a French company, like I don't know if that's the original Atari back in the 80s. Evidently, like they own the brand, so that's all that really matters. So the bottom line from this article is that, you know, whatever company has the Atari banner now is coming out with their own cryptocurrency. That's the long and short of it. This is an interesting headline here. So Warren Buffett is completely out of IBM, and he's doubled down on Apple, which has been kind of an about face for him because, like, you would consider Apple like technology, and Warren Buffett's kind of stayed away from tech for the longest time because he never really understood it. That's what he said, by his own admission. So while we were catching up on the news, all the indices have now turned negative, and this is about what I feared. Can't remember if I wrote it in my blog or if I mentioned it when I was recording my video blog, but given the fact that yesterday started out looking negative when the CPI number came out, and then the markets just ripped higher, it wouldn't be at all surprising if today was the opposite. And it started to happen around the same time. I mean, it's 11 o'clock East Coast. It was 10 o'clock, a little past 10 o'clock East Coast yesterday, which in the wintertime, the reversals occur around, kind of the top of the 8 o'clock, between 8 o'clock and 8:30. You get some reversals. Now, not necessarily vicious reversals. I mean, not necessarily reversals that completely change the trend, which is what we saw yesterday. Now, it remains to be seen if this is a reversal that's going to continue. The NASDAQ 100 and the composite are hanging on by their fingernails. The NASDAQ futures are hanging on, but everything else is red. And the Russell's leading the charge, down 27 basis points in the cash markets, down 11, 12 basis points in the futures. And here's what I missed. Was that right there. Which is pretty important because not only did it break through this trend line, but it also broke through this Fibonacci level of support. Which was drawn on the 30-minute chart this morning, as a matter of fact. So what that means is pay attention to here. Because this level, not only is it a pivot point, it's the midpoint of yesterday's range. It is also this other level of this other trend line support, and It's a minor support level for the Fibonacci. And again, overall, we're seeing a trend of declining volume on bullish action and increasing volume on bearish action. So right here at this midpoint, like draw a bowl here, right? This is the midpoint. This is 2 bars before it took a turn down. There was this, I'm not going to call it a frenzy of buying, but it was a spike in volume on buying. And then this downward draft started on increasing volume. So now the NASDAQ futures have traded back up through resistance. And are headed towards not only this trend line, but also these moving averages. So now not only have we broken back up through resistance, but we're also breaking back up into the above the previous trend line and above the 27 and 81 period moving averages. And the real important question is, does it stay above that level, which we'll know in about 45 seconds. Ten seconds. Not to make this like a countdown or anything, but so if you wanted to go long here, I think you could. You know, you're going to take a little bit of risk down to about probably here. Keep in mind that you've got some, again, this is your risk. You've got some weakening stochastics from a shorter term perspective. And yeah, that would have been a good trade. I wish I'd made it. Because despite being now it's looking like it's time to get out of that trade. Um, despite being a little squishy here, and this looked different because it was still drawing, but you know it was looking like oversold. I'm sorry, overbought. You know, and now we're seeing that here and here. So anyway, that would have been a good trade. If you didn't get out, get out. um, you might still be sitting on some profit. It is 11:33 now on the East Coast, so time for lunch. Traders are heading to lunch. I'm going to do the same, and I'll see you back here at about 1:30 Eastern Time. All right? Enjoy the time off.